Hey, thanks, Betty. Yeah, we have the right person here, Sarah Hunt. I'm so glad you can help us make sense of this thing. You know, it looks like there's progress, but there's so many pros and cons. Let's just kind of quickly take a look and try to run it through, and then you can tell us, as a portfolio manager, how you make sense of some of this stuff. Headline risk, still huge. The massive cleanup, how much will it cost?
Right.
Liability,
unknown.
Unknown, right. On the other hand, the stocks are down 20 to 35%. You got cash and cash flow. In the case of BP, $7 billion in cash, $27 billion in cash flow. And the spill is now quantifiable. But again, you're a portfolio manager. Sort of run us through your process. How do you kind of make sense of this to get to the point of, do you buy these things or do you just hold off?
Well, I think right now it's difficult to buy the stocks that are involved in this right now because you don't know what the liability is.
All 5 of them?
I think it's challenging. There are a lot of people who like to do that. I think that right now we're more concerned about staying out of the region right now and finding stocks that are not tied to the Gulf of Mexico, either from a cash flow standpoint or from a revenue standpoint. So I think there is a point at which you buy these stocks, but right now, since we don't know what the liability is, it's a little hard to quantify how much cash they're actually going to have to spend because there's a lot of unknowns still. And we hope that this is working. It sounds like it's working, but it's not finalized yet. So there's still a big mess out there. So right now we would prefer to stay away from that.
Now, let me show you something to see if this does anything to change your mind. If you look at the analysts that have been covering these things, all right, getting pretty positive. Let's just take a look. 103, if all these 5 stocks, 103 buys, 44 holds, 1 sell. They seem to be changing, but you say it's just too hard to quantify these risks. It's hard to
quantify the risks. You still don't know how much they're going to be on the hook for. You've also got problems because you've got a moratorium of drilling in the Gulf. So you've got a lot of folks that are going to have some revenue.
Big change from 2 months ago.
Big change. And you've also, they've put off some of the drilling in Alaska. There are problems right now for the drillers because right now you're going to have rigs that are going to be looking for work if they stop working in the Gulf for a longer period of time. We don't know in 6 months if that moratorium gets extended or not. So the unknown there makes the valuations, it may look cheap today, but you're not sure what the cash flow is going to be for the next year or so.
Right, and of course when we're talking cheap, we're talking about 7 times for BP and Transocean versus say 14 times for the S&P. Oil sector average 17. So they're cheap, but you say too many unknowns. I know there's some names that you like. You've talked about some of the state-owned oil companies like Statoil of Norway, Petrobras, Brazil.
Yep.
Talk us through why those are more attractive.
Well, because right now people who are not acting in the Gulf do not have an asset that may be in stasis for a while. I don't think that forever the Gulf is going to be gone.
And by in stasis meaning we don't really know.
We don't know. We don't know when we can drill it. We don't know when we're going to get cash flow out of it. So if you stay away from those, you have a better visibility. So it's all about visibility and being comfortable with what you think is going to happen. And right now, if you're outside of the Gulf, Statoil isn't in the Gulf in a big way. You've got Petrobras, which is obviously
North Sea. Yeah,
Petrobras, which is obviously in Brazil. You've got Apache, which doesn't have a lot of assets in the Gulf of Mexico. There are assets out there right now that are not involved in this. And there is going to be opportunity. And the question is just, can you get comfortable? If you're a longer-term holder, you could be comfortable. If you could hold these for 2 or 3 years, you could probably say, I'm pretty comfortable here. But if you've got more of a short-term 6-month horizon, there's still a lot of headline risk, and there's a lot of potential variability in what can happen.
There is indeed. Sarah, thank you so much. Betty, there you have it from Sarah Hunt of Alpine Funds.